Right, hello everyone, and just a quick rundown from us before we get stuck into the FOMC later on with their latest interest rate decision and statement. So you can see here down below, previous was 1%. Now we're going to get an interest rate hike today. Markets know that. We all know that. The question of tonight is how much. How much of an interest rate hike are we going to get? We're going to get 50 basis points, or we're going to get 75 basis points. Sterling markets have priced in a near certainty for a 75 basis point rate hike. Depending on who you talk to, some methods of calculating predict a 97% chance of a 75% rate hike this evening. But then other metrics then as well will tell you otherwise. 94, I think it was 94 Bloomberg analysts were quizzed. 8 of them went for the 75 basis point, and the rest went all for the 1.5 for the 0.5%. Sorry. So depending on who you ask for, markets are a little bit undecided as to what they are expecting in terms of the end figure when we get to tonight. What we do have to look at, I think, for me, is what the Fed have said. Now, the Fed at their last meeting, Jerome Powell, he did mention that we were going to see a 50 basis point rate hike at each of the next 2 meetings. The first of them being today, and that we are expecting or no mention of the 75 basis point rate hike. So I think that was key for me then at the last meeting, was no mention of the 75 basis point, and now markets are anticipating or expecting a 75 basis point hike this evening. Now the reason why they're expecting that is again due to inflation. We had inflation figures, CPI figures out of the US last Friday, 8.6% versus a consensus of 8.3%. So we came in hot again last month. After we've had a couple of months of a topping out of no kind of over the top surprises, no beats on expectation in terms of the CPI figures, but we did get that on Friday, and that has kind of ignited markets' fears of a higher than anticipated interest rate hike. Now markets or the Fed could not communicate that, voting members could not communicate that with markets since Friday, as they are in their blackout period before the meeting now this evening, before the decision out this evening. So I don't know personally in terms of where I'll be looking to focus my attention. I got to jump over to some charts and see what we're thinking. You can see this big higher time frame resistance level we got in the dollar index again. We rejected that 2 months on the spin. Do we get a catalyst today to break through that or reject it? Remains to be seen later on. We are definitely at a level where we could go either way. Euro dollar, again, we look to euro dollar. We had a few touches back here on this level and coming back here. Now these are both big monthly charts, levels dating back, this one till 2015, this touch back here in 2017. We've not seen the US dollar at these levels since 2002. That's 20 years. We're at 20-year highs this week on the US dollar. So there's clearly some positivity, clearly some buying into the event. We can see euro dollar again and continuing to sell. We haven't quite posted fresh lows from back here, as you can see them back on euro dollar. We're still rejecting this level down at 105, the support level. Will be interesting to see how that plays ball going forward. We can see then the US 10-year yield looking like it wants to break through 3% this week. We failed last week, failed in 2018, failed in 2013. Do we have the juice to break through it this time? Remains to be seen. So we've got quite significant higher time frame levels where we could go either way off and respect or reject again. But as of today, we kind of pinged off 3.5 on the US 10-year yield. So we have had a big, massive move higher. We've gone from 3 to 3.5 over the course of this week. So a pullback from here would have to be quite substantial to get back below that 3% on this week's candle. Again, you can see here then on the S&P 500, we've not got a great deal to go off in the S&P 500. We're just printing lower highs and lower lows across the daily time frame. We've most recently broken through this low here, which is a signal for trend continuation. We are held below it yesterday, but for me, what the Fed do later on is going to be definitely what I will look at with some more intent than the level just broken below on the S&P 500. So I'll have to see how that plays out, and then what will play out or what may play out. For me, the focus of attention, where I'm going to be focusing my attention, is not going to be on stocks. It's not going to be on stocks. It's not going to be on fixed income. It's not going to be on things like commodities. For me, I'm going to focus my attention on the dollar. I think it's easier to predict how the dollar reacts to this evening. If there's a 97% chance of a 75 basis point hike, and sterling markets have near fully priced in a 75 basis point hike, that would mean if we do not get that 75 basis point hike, that would be seen as quite a dovish situation. For me, I would like to see the Fed in terms of markets, I would like to see the Fed probably stick to the 50 basis point hike, so you can be sure of what they say going forward. If they communicate to markets at their last meeting that they're going to get 50 basis point at the next two meetings, and then get to today and then go 75, it just removes some of the credibility from me. Me and I will take their comments with a little bit of a pinch of salt going forward, as they are not going to stick to them. So a little bit tricky to know what that means going forward. In terms of the medium term outlook, does a 50 basis point or 75 basis point hike, does it really change much? For me, not really. The inflation is still going to remain a problem. Whether they do 50 or 75 basis point today, they are still going to hike interest rates going into the future. The hiking of these interest rates to cool down inflation is going to cause a drag on economic growth, which we are seeing across these different economies anyway. So the medium term outlook, I think, is still the same. A 50 basis point hike today, is not going to be dovish. It's not dovish by any stretch of imagination. It's still 0.5% worth of interest rate hikes. But in terms of short term trading, in terms of this evening's trading opportunities into the rest of the week, for me, I would prefer to see that 50 basis point hike and then sell some dollars off the back of that. We've got this, the dollar index at a big higher time frame resistance level. This could it be a catalyst to reject it? That will be, again, fundamentals aligning with the technicals, which would be nice. Again, euro dollar, the same thing. Get some dollar weakness, sell some dollars. Euro dollar would move higher from here, and it would be nice if we could respect that support level as well. The majority of the hawkishness, a lot of the hawkishness will have to be priced into the dollar and stocks and stuff like this. So for me, any longer term positions, medium term positions in terms of dollar higher and stocks lower, for me, are out of the equation today. For me, I'll be looking for a slightly more dovish central bank. If we get that hawkish, with a lot of it being priced in, I struggle to see how you get strong continuation kind of medium term off the back of this. So I'll be a little bit careful in the medium term, but in the short term, you can definitely look to formulate some trading ideas. For me, the best trading idea, I think, comes from a 50 basis point hike, a dovish Fed, and dollar lower. Remains to be seen how that plays out. I'll be staying away from stocks, fixed income, and commodities today. I will be focused on the US dollar, and we will see how that plays out going forward into this evening. We do have the economic projections going forward as well. Economic projections, the federal funds rate was projected to be at 1.9% at the back end of this year. It will be interesting to see if that's changed, whether the Fed think they're going to have to raise rates more than that. Be interesting to see what they say in terms of inflation, growth and employment projections as well going forward, but we'll have to see, kind of cross that bridge when it comes to it. Main focus of attention this evening will be on how much of an interest rate hike we get. Not a question of if we get a hike, it is a question of how much. Unsure as of right now. I'm gonna I would like to see a 1.5 or 50 basis point rate hike. I think in terms of what they should do, they should hike by 75, but in terms of my own personal opinion, that's what I think. But I would have also started hiking interest rates sooner, removing the need for that 75 basis point today. So I think they need to play catch up. The Fed do need to play catch up and raise interest rates. Do they begin to do that today and break what they've said to markets? For me, that would cause me to be a little bit skeptical of what they say going forward, which I don't think is what they want to achieve. Apart from that, though, that is the thoughts for this evening. A little bit undecided. I don't know how stocks react to this later. I'm not sure how bonds react. But I think if we do get that 50 basis point, I would like to see some US dollars lower. But we will see how that plays out at 7 o'clock this evening. Then that leads into the press conference at 7:30, where Jerome Powell will hopefully give us an indication of what the Fed are looking at going forward. But if we get the 75 basis point hike today, do his words mean anything after? I'm not so sure. But we will see what happens later on this evening. For now, though, that is it from me. And we will update again tomorrow when we get some fresh information. Thank you.